Hi, it's Kevin here once again from Spread Select. If you looked at our introductory presentation, you will see that we view trading as a process with numerous steps. We're a trend following process, therefore we must identify which markets have trends, we must assess these trends for strength, risk and volatility, and we must identify which of our predefined trade setups and management plans should be used should we take a trade. This generates a lot of information. We use 5 templates to identify the trends, assess their strength and analyse them to see which setup to use. We use a further 2 templates to assess risk. In total we generate about 700 data points for 25 markets we follow. We have decisions to make at each stage and these must be based on the information we gather. However, unless we're able to manage this information and identify conclusions to guide our decisions, we're just generating more data that is not very useful. We manage and analyse this information by means of the THERM. THERM stands for Trend Heat Rating Map. We're looking for hot trends. The THERM shows us where they are. It presents the information in an easy to read and accessible manner. And importantly, because it is based strictly on predefined rules, it guides us consistently through the trading process and ensures our decisions are never random. Here's a short extract covering 5 markets from a recent THERM. It may seem a bit confusing at first, but let's work through it and you'll see how simple and accessible the information is. Remember, we're looking for a hot trend. Under our screens or filters, we see that we've undertaken 5 different templates to assess where the hot trend might be. If it's hot, it's red, therefore look for the red. It's done for weekly and daily, so we have 10 little data points here. Next, we want to know what direction the trend is going in. It can be up, strongly up or moderately up, down, strongly down or moderately down, or it can be horizontal, in other words there's no trend visible. After identifying a trend, we need to know, well, how extended is it? Is it too extended to trade? After all, if the trend has got away from us, it's very risky to chase a trend. This will tell us. For instance, look here at S&P 500. There is a trend identified, but we have a very black square under the extent column. That is too risky. We wouldn't trade that. We want a nice green colour here. White is fine, but it's a little bit lethargic in terms of what trend might be there. Next, how strong is the trend? This colours codes the strength. Red again is a strong trend, blue is no trend or very weak trend. It also gives us a percentage estimate of the strength of the trend, between 0 and 100. Unless we reach a particular strength here, we will not be identifying any setup and we should not take a trade. The next column relates to the volatility in each particular market. DATR stands for the Daily Average True Range. It tells us in points the average true range, whether or not it's rising, and whether or not it's above its long-term moving average. For some setups, we're looking for volatility. For others, we don't want volatility to be too high. The right-hand side of the THERM is very important, as it tells us which setup we can use. We've identified 6 setups in advance. The criteria for entry to using any one of these setups is set out and never varies. Secondly, once we enter one of these setups, we know how to manage the trade because the rules to do so are also set out. There you have it. Looking back at the full picture of these 5 markets, we see on the very left hand side we have a very simply ready reckoner. An X means don't trade this market. Either there's no trend or it's too extended. A little green tick says this looks good, there's a trend here, it's in a tradable level of risk. If there's an exclamation mark, it means there is a trend. We can trade, but be a little bit careful. There's something here just worrying. Perhaps it's a little bit extended, but it's okay to trade. The THERM shows us where the opportunities may lie, but it's important to recognise what it does not do. Above all, the THERM is not an automatic trading system. It is not a black box. It must be fully understood and it will guide you to where the best opportunities lie. Then the decisions are up to you. It does not time our entry. This requires further analysis, and while it indicates when we might exit according to which setup we will use, it does not time the exit either. Importantly, it does not tell us exactly where to set initial stops or targets. Again, through the ATR, it will guide us in this direction, but further analysis is required. It points us in the right direction. It tells us the criteria that must be fulfilled for an entry, and how to manage the trade once it is taken. The THERM is distributed to all members of Spread Select early before markets open on a Monday morning. It is updated as required during the week by the daily THERM. This usually occurs either on a Wednesday or sometimes, if there's volatility in the market, on a Tuesday and Thursday. It covers 15 of the main Forex pairs and 10 other markets such as gold, oil, other commodities, the S&P and so on. The beauty of the THERM is that it puts the important information at your fingertips. Once you know how to read it and know what the setups mean, you know it will guide your decisions according to the rules. You will not be trading randomly. If you wish to get a free copy of a recent THERM, simply fill in your name and email address on the form at www.spreadselect.com. Thanks for watching and good luck with your trading.